Welcome to this webinar. C.O.T stands for Commitment of Traders. This is a report that is issued by the CTFC every Friday afternoon, and CTFC stands for Commodity Futures Trading Commission. This is the commission that regulates all the trading in the US. So the report is based on data up to the previous Tuesday. So it is usually 3 days late by the time it is released. And you can find this report on the C.O.T website. Just go to search Commitment of Traders, the very first website. You can see the latest announcement was on May 2nd, and scroll down up to where you see the heading, the current legacy reports. So under futures only, what you're looking for is the CME, or the Chicago Mercantile Exchange. This is the biggest exchange, so this is what we look for. And under futures only, look for the long format. Scroll down to find the currencies. And the currencies starts with the Canadian dollar, the Swiss franc, Mexican peso, British pound, all the way down. This report is so complicated and full of jargon, but what you should focus on are just a few things. Now let's take the British pound as an example. And on the very first column, you can see here the open interest. This one is the total number of futures contracts which were open when the data was recorded. That is the previous Tuesday. As I've said, this report is usually 3 days out of date. So this one is equivalent to volume that we see on our charts. When I talk about volume, talking about this volume down here. So in the futures market, you have a way of seeing the volume and whether it's increasing or decreasing. And this is by looking at the open interest. As you can see in my C.O.T analysis, the very first column is the open interest or volume. And when it comes to open interest, the key thing is to look at whether the volume is increasing or decreasing and compare it to the previous reports. So for the pound, you can see the lowest volume we had was on March, the third week of March. It was at 190,000. The highest we had was on April at 231,000. The latest report, that is last week's report, we had a volume of 231,602, and this is the volume that is in my report. So the key thing here is to compare the volume to the previous volumes and where we are. Is the market currently having high volume or low volume? And we can also counter check this with the volume in our charts. So the volume here, you can see it was high. Now the second thing you should be looking at is the non-commercial traders. This is what we should be focusing on. because these are commercial hedge funds who hold positions for themselves or their clients. So these are large professional groups who trade very large lot sizes or contract sizes. For the commercial group, these are just large banks who hold positions for themselves or their clients, and they are not in the market for speculative basis. So they don't buy to join the trend. They are simply buying or selling to hedge their clients against currency risk and transitions for the goods and services in the futures market. And finally, on the final column is non-reportable positions. So these are traders just like you and me. These ones, they are generally wrong. So in this whole report, ignore everything else. What you should be looking at are just three things. First thing is the open interest. Second thing is the non-commercial, and under the non-commercial, we look at the long and the short. So that's it. So the weekly data on its own, like this week is the British pound CME, commitment of traders futures only on May 2nd, 2023. And you can see, okay, we have the open interest, we have the shorts and the long. You can see the long are more than the shorts. This weekly data on its own doesn't tell us much. We need to build a picture of the changes in the data week by week. So this is how I do it. So you can always find my update on my YouTube channel. Subscribe for the weekly C.O.T updates.